Alright, let's get started. Just want to do a mic test and a screen test, see if you can hear and stream my screen okay. Okay, looks like everything is working. Let's get started. Alright, welcome back to my channel, guys. Doing another live stream. Going to be doing a weekly recap and looking over some stocks and what the market is doing. And we're going to go over some few options in stocks, swing trading, and option strategies as well. Before we get into that, make sure to please check out all the disclosures and disclaimers before the video. Just want to put that out before we get into it, and that can be found on pinnacletrading.us website. Alright, let's jump into it. So right now I'm looking at the futures and looking at S&P 500. You can see today we had that nice gap up in the morning and then looked like a big bull trap right there, and we saw markets coming crashing down all the way down to 263.73 right there in the after hours. So what do I think about markets right now, and what am I looking for next week? I'm looking at markets and thinking that they're going to come down, and not just because we've seen this sell-off here, but because we've seen that continuation follow through from the 5 days. So looking at the 5 days, you can take a look here. We tested all the way up to 281.38, and we saw markets go up due to that nice China news. And we saw Trump was coming to a deal with China about the trade war issues and all of that. But then we saw that both sides weren't really agreeing to that. And it was really up in the air and just kind of floated away. And then we saw that sell-off. And also Feds were talking about increasing or hiking the rates again. So we've seen that again. And then we saw the Dow tumble more than 1,300 points in the past 2 days. So Thursday and the day before, markets were closed Wednesday, so the day before, Thursday and Tuesday, total of more than 1,300 points in the Dow. So what does that mean for the markets? It's a good time to be cautious, and we're also getting into the end of the year, into December, so we have to be aware of that sell-off as well. So let's go ahead and look at it and see what I see on the charts for the markets. So let's go ahead and get into that. So looking at Thinkorswim platform, this is the one that I use for all my chart analysis. So looking at the yearly chart on this, I'll do a regular chart and I'll do my Fibonacci chart that I've been doing more often lately. Let's get rid of these level 2 and time and sales. So looking at the yearly chart, let's zoom in over here. So you can see it's a triple bottom test off 260 area, and we're seeing that go a little bit below. So during that correction that we had started in about October, it went all the way down to about 259, 258 area. You can see that candlestick extend down right there. And if we're going to test below that, then it's going to be a big problem, and then we're going to be entering that bear market. That's technically how it goes. But we're seeing that 260 test this week, and markets bounce off nicely off of there, 262.44. So looking at that yearly chart, the last correction that we had, the one in the beginning of the year, February, you can see the chart pattern. We saw markets come down, test off that 200 SMA, and bounce off nicely from there. But we're not seeing that this time. So we're seeing that triple bottom test, or you can even call it a triple top test of that 280. So between that 260 280 range is where the markets are stuck. So will we have that continuation of the sideways pattern? It's very tough to say. We'll have to wait for closer to end of the year, maybe even January, to see what exactly will happen if we get that big sell-off at the end of the year. And looking at the Fibonacci chart, let's load that up. Again, if you're a member, you get this for free, the Fibonacci setup, and you also have that video on how to set that up and use it. So I'll talk about the membership later on in the video, but right now, looking at the Fibonacci, again, we're coming down to 78.6% retracement. If we're going to break that 261.7, I did post that chart in the chat room today and a brief description of what's going on with that. So looking at the chart, I said if we break that 268.59 in the morning, which happened, and we did break below that area, you see that big red candle, and then we came down all the way to that 262, 263 area. Didn't break 261.7, so that's why we didn't see a break below. But if it does open below that or break below, next support will be at 260. So that's what we're seeing here. 260 big support. Again, you don't see the candle going below there, and we're looking at that 261.7 test right there. So let's see if it breaks below that, and we're seeing that support follow through nicely, triple bottom test. So if we bounce off of that, should be testing next resistance at 270. This area 268.59 and the 270 and the 280, and if we break over that, we'll break out of that correction pattern. If not, it's going to get really ugly from here, and the end of the year sell-off, the tax sell-off, will not help at all. So again, let's go back to the yearly chart. Again, next support below that 100% retracement is going to be at 252.92. If we do break that and the 260, then it's going to be pretty bad for the markets. So let's jump back into my scripts. And looking at the 180-day chart on this, ignore that breakout alert right there. Again, you see 263.75 and very lows. MACD coming down as well. RSI about in the oversold region, just a little bit above 30. So a lot of stocks are like that. Looking at the yearly chart, you can see that on Apple broke the big support. If you watched my previous video on whether to buy Apple or not, I made a video when it was about right here and talked about if it's going to test that 170, which it did, bounce off nicely. I said if it does break over that 180, add a little bit more, and if it doesn't get to that 190, definitely sell before it comes crashing down to the 180 support. So when you break the resistance of 180, when a resistance is broken and stock goes above, that becomes the next support, and that 180 support broke, so that's where you'd be selling on that swing trade, and then pick it up back if it breaks. If it bounces off of 170, then you'd be picking it up. But again, it broke that today, and it held out very strong today. If you look at the charts on this, MACD was curling up. And every time it got to 170, you can see it clearly bounced off candlestick. The lowest was 170. It wasn't 169.99. It was 170 all day until the last 2 hours. It broke below and came down all the way to 168.3. So that is a big support in the market as well, because Apple is the biggest market cap. It's over $1 trillion, first $1 trillion company, and has a huge effect on the market. So let's see if Apple comes up. I saw Bank of America, the bank's taking a big hit too. Looking at the yearly chart, Bank of America, you see huge drop all the way from 29 all the way down to 25.43. We haven't seen that in over a year in that range. JPM, Morgan Chase, JP Morgan Chase, we're seeing that as well. And the 102.5 is going to be at the big next support, you can see, and then 100. If it breaks below that, that's going to be really bad for the banks. And we saw many other stocks that I like as well. Visa taking a hit. I trade this back and forth, testing that 200 SMA. If it breaks below, again, let's see if that happens. MasterCard, I played puts on this today, made a nice profit, and the puts actually went up to about 350% profit. And I alerted that in the chat room. And we're seeing a lot of other stocks come down as well. Another one was Square that I've been watching. This is a solid company. And we've seen the same pattern last year. If you look at the December area, we've seen it come down all the way to 35 and then bounce off nicely. So I'm expecting Square to come up nicely in the beginning of next year. But let's see how that plays out as well. 1 second, guys. I'll be right back. The next thing I want to get into is looking at option strategies. I know I tried to talk about this in the last video, but I think the volume cut out a little bit after the halfway mark. So let's go ahead and jump into that. So what are options? They give you a better leverage on stocks, higher leverage, more risk, better return. But looking at options, profitcalculator.com, this is a great site you can use to not only just visualize profit versus loss, but also use advanced option strategies to see how they provide a return over time. So let's take Apple right now. Everybody knows Apple stock. You're probably watching this on an Apple device right now. So let's look at a regular call, a long call. That would be, you'd be buying a naked call, or sorry, long call on that, and comparing it to a spread. So say, let's look at Apple right now and look at the yearly chart, and say you think Apple is going back to 190 by the end of, let's say by June. So you go to a June expiration option. And if you guys don't know about options, I have videos on my site, a different playlist on how to buy options on Robinhood and how to trade options, so an intro to options as well. So make sure to check out those videos on my channel. So let's say you're thinking Apple's going to 190 by June. So that's a June expiration. That's the only one. So you click on the 190 and then you'd calculate it. And then it gives you a nice chart, profit versus loss over time. But the big thing with options is they decay. So that means over time, the value goes lower and lower. So if you bought it right now, it's at 170 area, and if it expires at 170, which means we go to the expiration date and that's where the option expires, you'll be losing all of that. So you see the decay in the red, that's why the option. So it needs to be going higher as time goes on. But same thing, if you were to get a call spread, let's go to the same expiration for June, and you're thinking it's going to be going to 190. So you can get a 170 call or even a 180 call, and then you can sell one. You can sell a, let's say, 200 call. So this is a little bit of spread on this, but just giving an out of the money call on this one. Let's let this load up. Alright, I'm going to refresh this page, see if it works again. So we're doing a call spread on Apple. And then we'll be selecting that June. And we'll be going to 180, and then buying a 180 call and selling 200 call. And that is all done in one trade. Or you can do it separately, but it's just easier to do it in one trade. Okay, so load it up now. So changing that to profit versus loss, that's the one that I like to look at. You can look at the percentage, but it's easier to look at the profit versus loss in amount of dollars. So you can see the decay is a lot less. So if we were to go to 170, it expires at, you'd be losing 578. That's because you're buying a call, which is the same call you're paying over there, 1048. So you're paying more here, 713 for this one, and just for the 190 call, compared to this one where you'd be paying 578. And that's because you're buying a call for 10, so $1,048, and selling one for 470. So you take that debit out and then you get credit for this one because you're selling it, so you get that immediately. So you'd only be paying 578 compared to this much, or whichever one you choose. So you can see over time the decay is a lot less, and if we were to stay at that same price, then you'll be losing that 578. But at the point over the sell, if it expires over the sell, we chose for this one to be a 200 call. So if we were to expire over 200, then that's where you cover all the premium for that one for the sell. So premium is whatever you paid for that sell, so you'd be covering all of that. So you can see anywhere over that 200, you'll be covering that. That's why there's a big jump in there. The big difference between calls, normal calls like these versus call spread, is that you're maximizing your loss and you're maximizing your profit. You can see maximum profit is 1422 compared to a naked call like this. It's going to be 1087, or in the lower time it's going to be about 2000, something like that. Whereas here it's going to be a little bit less. Again, I chose different expirations, but you can see a general idea of why these are a little safer. And say Apple does go down to 165 by March, and you just want to get out of that, you'll be losing about $200 on that one. And if in this one, if it goes down to 165, you'll be losing about $400. So you can see the difference in there. You're paying more for these with the DK, where compared to a call spread, you're paying less, but you're also maximizing and minimizing your profit versus loss, and you're maximizing your chance of profit, which is a big thing you want to do with options, as you're using that leverage of the 100 shares per call. So you want to maximizing your chance of profit. So that's just a quick description of what I want to show on that one. I'll make a more in-depth video on this, but I just want to show why call spreads are a little bit better and giving more flexibility with expirations and the DK and the options. And I'm going over this now because we're seeing that big volatility in the markets. You can see the up and down moment. So when you're getting stuck, say you're picking up a call right here and you're thinking it's going to bounce back up, and you see markets crash more, that's where you'll be losing money back to back, and you're going to try to get in, and maybe next jump in, you're going to think, oh, it's going to go back up, and then you lose again. And the big thing that you can do with the call spread is you can cover individual sides. So say the stock goes down, let's say Apple goes down to 165, you can cover that call. If you have some extra money, you can cover that call, cover the profit, and then wait for it to come back up, and they can cover profit. So you're making money both ways, and vice versa. You can, when it goes up, you can sell the buy call and then cover the sell side when it goes down lower. So that it gives you some flexibility and more chance of profit on that one. So I just wanted to show that call spread and why they're great for volatile times, and also you can use call spreads to generate monthly income, and I'll make an in-depth video on how to do that. But I just want to show that because we're heading into the end of the year and markets are a lot more volatile right now. Again, you can see just in the week, every other day the Dow has been dropping about 500 points, going up a little bit, and then dropping maybe 500-600 points. So that's just why I want to show that during this time of the year. So hope you guys got a great in-depth view on how to get in those call spreads and a market recap. So that was my weekly recap. I'll be